After yesterday's consolidation, today was no better. And really on all fronts, you had the frontliners which were damaged in today's session. But not just that, it was the broader markets as well which witnessed quite a bit of carnage. So the mid-cap index was down by 0.5%, as was the small-cap index, which shaved off a good 0.8% by the end of the day. Your weak pockets were the entire high beta, so you had realty as well as metals, which really took it in the chin. Apart from that, the intraday chart of the Bank Nifty should be brought up on your screen also, given that the Bank Nifty spot slipped below the crucial 10,000 level for the first time since the 28th of June. FMCG and healthcare, those were the two sectors that managed to hold up. What about the F&O activity a day ahead of expiry? We've got Navneet Saluja from our research desk with the latest. Navneet.
Well, Awan, it's turning out to be a very volatile week. If you look at the August futures closing, they closed below the 5,300 mark with about 9 points premium. And looking at the September futures, they closed at about 53.26, well below the 53.50 mark at about 39 point premium. Well, the premium for the September series has contracted compared to yesterday's, and they added about 39 lakh shares in today's trading session. If you look at the Nifty rollovers, they stood at about 43%, which has been there at par if you compare it to the previous series. And looking at the options data, well, if you look at the Nifty PCR, that fell sharply in today's trading session to 1.13 compared to yesterday's closing of about 1.23, clearly indicating there was huge call writing in the system today. If you look at some of the August call strikes like 5,300, that added about 21 lakh shares, 5,400 call strike added about 19 lakh shares, and on the put side, you had a lot of unwinding happening at 5,300, which shed about 10 lakh shares, and 5,400 put strike shedding about 16 lakh shares. For the September series, any which ways, you had 5,400 call, which added about close to 8 lakh shares, and 5,200 put strike, which added about 3.5 lakh shares. So it will be important to see where the August series expired tomorrow. And looking at the stock futures, well, Tata Power managed to hold up in today's trading session, so we saw fresh long positions being built up there. JP Associates was under pressure because of the debt concerns. We saw fresh short positions being built up there. It was the metals pack which continued to be under pressure, so talk of counters like SAIL, Sesagoa, Sterlite and Dalco, all these counters witnessed fresh short positions. And you also had United Spirits, which was up and about in today's trading session, where fresh longs were seen. Back to you.
Okay, thanks very much, Navneet, for giving us those details. In all likelihood, expiry is going to be on a fairly sour note, perhaps even below the crucial 5,300 level. To some of the index losers, in JP Associates, we spoke about that, fresh shorts and open interest. In the spot market too, it was massive volume activity supporting that lower price action. The company has sold $150 million worth of FCCB proceeds, and that is going to be utilized to part finance their repayment of the existing FCCBs. Goldman Sachs also put a sell, cutting its target price to 57 from 60. SAIL, Sesagoa, so the entire metals pocket was weak once again, and you had DLF, which also featured on that list. But let's focus in then on the metals pack, and you had most of the counters which really took a knock-in trade today after brokerage house CLSA raised the red flag on risks in the Indian steel sector. So the likes of SAIL, JSW Steel, Tata Steel, JSPL, all of the counters ended deep in the red after CLSA said that the recent sharp drop in the global steel prices is a clear negative for the margins of most of these companies. Let's take it to our research analyst Gargi Parikh, who tracks the sector very closely. She joins us for more on why CLSA is bearish on the metals packs. Gargi.
Well, we saw quite a bit of pressure building on metal companies, whether it was the SAIL, Tata Steel, JSW, or even, mining companies like Sesagoa. CLSA coming out with a report. In fact, they've downgraded Tata Steel this time around. They've reduced the rating of the counter. They've also maintained a sell on JSW Steel and SAIL. They have cut the EPS estimate for Indian steel companies by 12 to 23% for FY13 to 14. A couple of, cautionary statements that they have given. They are expecting that steel prices will not go above $600 per ton. That is for the year FY13. And they are expecting that the iron ore and coal prices will also come off almost 8 to 10%. They've reduced their calendar year 13 estimates by 8 to 10% for coking coal and iron ore both. There has been a decline that we are seeing globally in terms of steel prices as well as input costs. Remember that spot iron ore prices in China have come down to levels of 2009. About $100 per ton is where they are trading right now. They've also mentioned that there will be some margin pressure coming in for steel companies that have captive inputs that is the raw material of iron ore and coal with them, mainly because the realization of steel has come down and that is going to impact their EBITDA levels. Overall, it seems like a cautionary statement coming in for Indian steel companies. On the back of that, the sharp decline that we saw in many of the steel companies today.
Thanks very much, Gargi, for breaking it down for us. So that's the entire metals pack which came under quite a bit of pressure.